How to increase your credit score with a few easy steps. Credit scores are one of the most important aspects of your financial life. They are used to determine the interest rates of loans, mortgages, and other financial transactions. This is why it is important to maintain a high credit score. If you have a low credit score, it can affect your ability to borrow money for many things like buying a car, getting your dream home, and even getting approved for student loans. Now, if you are enjoying this video, please don't forget to smash the like button and subscribe for more videos like this. Also, make sure you click on the bell to turn on notifications. But what is a credit score and how does it work? Credit scores are a key indicator of a person's creditworthiness. Those with high credit scores have the opportunity to qualify for a more favorable loan and lower interest rates. A credit score is calculated based on the information in your credit report and by taking into account information about your debt-to-income ratio, payment history, number of hard inquiry, and many other factors. A credit score can be used by lenders to determine your eligibility for loans, mortgages, and other types of financial arrangements, and also to determine interest rates on loans, or to evaluate an individual's ability to repay an installment loan. Credit scores range from 300 to 850 and can be increased by paying off debt, having a good payment history, improving the quality of your credit report, etc. A good credit rating is not just about how much money you have in the bank. It is also about how well you manage your finances, how much debt you carry, how many late payments you make, and how often you pay your bills on time. The best way for you to improve your credit rating is by making sure that all of these factors are in place. You can increase your chances of getting approved for a loan by following these simple steps. Step 1. Make payments on time. Many people have bad personal finance habits that can negatively impact their credit score. Making payments on time will help increase your credit rating, which will make it easier to get more favorable rates from lenders. Step 2. Keep your debt under control. Many people have a debt they are struggling with, whether it's credit card debt, student loans, or even mortgage debt. If you have major credit card debt, it can really affect your score in a negative way, because it can indicate that you may be struggling financially. One way of increasing your credit score is to work on paying off your debt. This will raise your credit rating and improve your chances of getting a better interest rate when you borrow money in the future. Step 3. Keep your credit card balances low. Credit cards can be a helpful way to carry around money and earn cash rewards. However, it is important to be aware of the dangers that lurk in the credit card world. One way to increase your credit score is by keeping your revolving balance low and only having a few open accounts at a time. Step 4. Keep your credit utilization ratio below 30%. The credit utilization ratio is a measure of your ability to manage your credit while paying down balances on your loans. As you pay down balances, the ratio decreases. When this ratio increases, it's an indicator that you may be overextending yourself and could be in danger of defaulting on these loans. Credit utilization ratio is the amount of credit you have outstanding divided by your credit limit. This means that if your credit limit is $12,000 and you have a balance of $1,800 on your card, your utilization ratio would be 15%, which is good. Step 5. Don't open too many accounts. While it might seem like you're doing the right thing, the reality is that having multiple accounts could actually hurt your credit rating. Step 6. Check your credit score regularly at least once every 6 months. Checking your credit score regularly is important for many reasons. It can be used as a way of monitoring your financial situation. It can provide valuable insights into how you're progressing in life, and it's also a good idea to monitor for fraud or identity theft. Ask for an annual free report from the 3 major credit bureaus, Equifax, Experian, TransUnion, and review it regularly to make sure there is no negative information about you in their database. As seen, credit scores are an important factor in our daily lives. They influence the way we live and make decisions such as whether to rent or buy a home, get a credit card, or even get a loan. If your credit score is low, there are many steps you can take today to improve it and increase your chances of getting approved for loans and other financial products. This video is meant to help people who are looking for ways to improve their financial situation and increase their credit score. It is easy to feel overwhelmed when it comes to finances, but these few simple steps mentioned can help you get back on track. Please don't forget to smash the like button, subscribe and click on the bell, It will help me a lot. Thank you for watching and I'll see you on the next video.